Hello,
Hey,
everyone, and welcome to the Money Power Invest Show. I'm your host, Montique Shelton, along with my co-host, Terrence Dubois. And we brought this show about to educate, motivate, and inspire people to get the conversation started about finances, specifically real estate, business, credit, the stock market. We just want to make sure that people are educated and get the proper information because there's not a lot of places where you can get information on finances on the internet. So we thought we would bring our expertise to the forefront so that we are able to, again, inspire, educate, and motivate individuals. All right. So what I'm going to do now is go into our backgrounds. And Terrence, I'll let you get started first. So why don't you go ahead and introduce yourself to the people?
sure. Thank you for actually having me. My name is Terrence Dubois, Buffalo, New York resident, born and raised here. I've been in the financial industry for the last 21 years, I believe, going on 21 years actually. I actually have my Series 7, which is the stockbroker license to actually be able to sell stocks and basically become a stockbroker. I have my New York State life and health insurance license. I have my undergrad from Duval College in business management and accounting, and my master's degree in from Madai College. And my thing is, I really just want to help as many people as I can because the thing is, you don't have to basically acquire the debt that I acquired to basically gain this information. So that's why the purpose of the show is more so to basically give our knowledge and basically give it to everyone who basically wants to win.
Absolutely, absolutely, and that's pretty impressive, man. That's pretty impressive. Even though I knew you for a long time, that's pretty impressive,
Thank
man.
you, man.
I started my career out at the age of 18 at HSBC Bank, and I was there for 17 years. And I was a branch manager at the time that I left the bank. So I was managing three branches at one time at the end of my time there at HSBC. But also in that time, I did a lot of other things. You know, I was assistant manager, I was a consumer banker. I was a teller.
Hmm.
I worked in the sorter room. I worked in the mail room. So in that 17 years, I did a lot at
Okay.
HSBC, and that's a big part of my life. You know, and I
Hmm.
still cherish it to this day. I also was partners in a car dealership, used car dealership,
Hmm.
a couple years back. And we did pretty well there. That was my first time getting introduced to the car business.
Okay.
That experience actually led me to work into a major car dealership. I was a sales manager for a Toyota dealership in Buffalo, New York,
Hmm.
and also a Hyundai dealership. So I
Okay.
was sales manager there. So, I learned a lot, helped a lot of people know the ins and outs of car buying and credit and how all that good stuff worked. I also was a loan processor. So I used to underwrite loans, pretty much get people approved
Hmm.
for loans and verify their documents and things like that. I also have my New York State real estate license a couple years back. I don't no longer have it anymore because I'm really not, a real estate guy. Like I don't like the process of showing people houses
Hmm.
and things like that. So,
Yeah.
but I did have my New York State real estate license. I also own a credit management company as well. I own a sign business, and I also own a financial coaching and business management
Okay.
business as well. So that's pretty much our backgrounds there. We're going to go into a little disclaimer, and I'm just letting everyone know out there that this show is for educational purposes only. It's
Absolutely.
not investment advice. We're just giving our opinion on the subjects that we do cover here. And as far as disclosures, Terrence, why don't you go ahead and disclose the licenses and things that you have?
Correct, correct. So although I do have my New York State life and health insurance license and my Series 7 and Series 63, um, I'm licensed as a financial advisor, but basically, please don't mistaken this as investment advice. So therefore, it's more so just as Montique mentioned, is more so for educational purposes, and once again, is not for investment advice.
Okay, great. And also a disclaimer, disclosure. I do have a pending New York State property and casualty license. That's the license for auto insurance, homeowners insurance, renters insurance, pet insurance, motorcycle insurance. So I do have a pending New York State license. So I do want to disclose that as well. All right, so now we got that out of the way. Our clothing that we have on today
Dope.
is Respect My Blessing. Respect My Blessing is a clothing line started by actually a cousin of mine. His name is Selly, and he has a great clothing line. So I want you guys check him out. On Facebook, he's at Selly Sell Marcellus Turner on Facebook, and on Instagram, he's at Selly Sell. That's CELLYCELL 716 on Instagram. And also check out his website. It's www.respectmyblessing.com. All right. So now let's get into what everybody wants to hear. So the first thing that we want to discuss and go over is what's the fastest way to increase your credit score? All right. So I get that question a lot, and I'll go ahead and I'll give up what they call the sauce, the information on what it is. So the fastest thing to increase your credit score is tied to your credit utilization. Your credit utilization is 30% of your credit score. All right. So because it's 30% of your credit score, the fastest way to increase your credit is to pay down your credit cards or things that you have lines of credit on. All right. So your utilization is only tied to your credit limits on your credit cards. And if you have lines of credit, like a home equity loan, a personal line of credit, that's what controls your credit utilization. It has nothing to do with a mortgage or auto loan or any other loan that you may have. All right. So your credit utilization. So I'll give an example of how this works. So let's say you have $5,000 worth of credit cards. Let's say you have 5 credit cards with $1,000 limit on each one of them. All right. So let's say you're maxed out on your credit cards, meaning that $5,000 that's available, you have, let's say, $4,900 charged up on that account. So your credit utilization is almost at 100%. It's like 90 something percent, right? So the fastest way to increase your credit score, because a lot of times when that happens, when your credit balance is that high, you'll find out that your credit score start to drop. It'll start to become lower, or it'll just sit there and stay the same. All right. So what you do in this instance is, if you have the means to do it, you would pay down the balances. And again, I'm using $5,000, but this can work for any dollar amount. Okay. So you could either pay that credit card down, and once you start to pay that credit card down, your credit score will increase. All right. So what about the people that can't pay it down? They don't have the means to be able to pay it down. What's the fastest thing that you can do? The fastest thing that you can do is there are credit trade lines that you can get and add to your credit report, where, for example, if you add these lines on your credit report, and they're guaranteed approval. And not, when I say guaranteed, they're like 98% approval. So pretty much all of the things that I can show you what to do is all things that you're pretty much guaranteed to get. All right. And it's about 5 or 6 different trade lines that you can get. All right. So when you get these trade lines will give you big balances. They'll give you big credit limits. Right. So it's about 22, $23,000 worth of credit limits that you can get by this method that I can show you guys. All right. So when you get these trade lines, what will happen is, let's say you get $20,000 worth of trade lines added to your credit report, and then you still owe $4,900, and you had that $5,000 limit before. So now your credit utilization will shoot up. It'll go from, let's say, 90 some percent, and you add $20,000 to your credit limit, as far as your limits go, and you owe that 4,900. Now that's going to cut your credit utilization to like 25%, just like that. And when it goes down like that, your credit score is going to just shoot up. And a lot of times, when I show my clients how to do this, a lot of times your credit score will increase anywhere from 50 points to 150 points just by doing that. This has nothing to do with getting things deleted off your credit report or any of that other stuff. Just doing this one trick alone will jack your credit score up. All right. So again, the first thing that you can do is you can pay down your limits to get your credit up, but it's not going to shoot up as much. But if you add these trade lines to your credit profile, then your credit score will definitely increase 50 to 100, 150 points.
Hmm.
And it's a great trick that I've been helping a lot of my clients do over the years. So I want to just go ahead and give that to people because a lot of times with credit, people don't give away these secrets or these things. They keep it
Sure.
to themselves, or they
Hmm.
use it to benefit themselves.
Okay.
All right. So if anyone wants to know this, learn how to learn this trick or to get these trade lines, just send me a inbox on Facebook. On Facebook, I'm at Montique Shelton, and on Instagram, I'm at Montique Shelton. So just send me a message, and if you want a link to these trade lines, and I can definitely help you guys out.
Okay.
Mhm.
Montique, I got a couple questions about that. So now is that more so a guarantee? Like once you basically apply for those credit increases or basically apply for those credit lines, will that basically automatically increase your credit score?
Yes, it because again, because 30% of your credit score is based on your credit utilization.
Hmm.
So once you add a big line like that, like 20,000, when you add like 20,000, $10,000, $20,000, it automatically will shoot your score up. Now, the depending on your credit profile, because each person is different. That's why I said
Hmm.
it could vary. It could be from 50 points to 150 points. So each person is going to affect differently depending on your credit profile. If you got a bunch of bankruptcies and child support payments and tax liens and missed payments and things like that, it won't affect it as much.
Hmm.
But if you have a clean credit history where not a lot of missed payments, you have you know nothing derogatory and things like that on there, you'll see closer to 150 points. So yes, this method works, and I've been helping a lot of clients for years doing this method.
Okay. All right. Another question. So it's like I know a lot of people are basically saying, you know what, this it got to be some catch to it, or like what's a I got you moment. So is there a fee in order to do that, or like is it more so everyone would basically get it if they basically go to the information that or to the websites that you basically told them about?
Well, these trade lines, because they're exchanging these all these trade lines, they report to all three credit bureaus.
Okay.
They report to all three credit bureaus. So a lot of them are like our what do you call they used to call them catalog cards.
Okay.
So it's basically where you might have to sign up to get these products. Like they might have thousands of products from this one particular place.
Hmm.
So a lot of them are places like that. Some of them are just credit card companies.
Okay.
Some of them are credit card companies that people just don't know about. But the majority of them are some type of membership that you have to sign up for.
Okay.
But again, just keep in mind you're not getting these cards to run up credit. You're only getting them to increase your credit score so that you can do, because most of the time most people that's trying to repair, restore, or fix their credit, they're either trying to purchase a home, purchase a car, trying to get some type of loan of some sort, maybe a business loan, a personal loan, trying to get an apartment, trying to get approved for something. Um, so that's who those are will work for. But there's
Mhm.
no catch to it.
Okay.
But sometimes there is a fee that these companies charge to. But again, in exchange, you're basically paying to help your credit score
Correct.
increase.
Hmm.
You know.
Okay. Perfect. Perfect.
All right. So yeah. So again, reach out to me if you guys want to know that information, and I'll definitely be able to help you guys out. So the next thing that we're going to go into now is to talk about life insurance. So I'll turn it over to Terrence for this section, and Terrence is going to explain to us the difference between term life insurance and whole life insurance.
Okay, perfect, perfect. So with term, I like to basically dumb it down as easy as I can. So when you're dealing with term insurance, I like to use the analogy as term insurance is just like renting some insurance. So
Hmm.
think about you renting, let's say, an apartment. As long as you pay for your rent every month, you actually have somewhere to stay. Same thing with life insurance. As long as you're paying for it every month, you basically have that insurance. But with term insurance, they give it to you in fixed amount of terms. So in New York State, it varies. In different states, it varies. But in New York State, the longer you can have term life insurance is basically 30 years in New York State.
Mm,
Other states, it may go as long as 35 years. So that just means the insurance company is saying, listen, I'll give you, let's say, a $500,000 life insurance policy for 30 years. So the insurance company said, all right, well, hey, if you basically pass away between now and the next 30 years, we're guaranteed to basically give you this life insurance dollar amount of $500,000 because that was the original agreement. So the life insurance company is saying, you know what, I'm betting that you basically won't die before 30 years. You're betting, I wouldn't say betting, but you're just saying, hey, in the event if I do pass away between now and the next 30 years, this term insurance is basically going to leave a legacy for my loved ones.
mm,
So that's really the reason why you want to purchase term insurance, is because it really just basically gives you instant cash. Well, yeah, it's in cash as soon as you actually pass away. So you're most so just saying, you're not betting on your life. You're just saying, hey, in the event if I do pass away, this life insurance benefit is basically going to go to my loved ones. And a lot of people say, you know what, I don't like term insurance because it won't allow me to borrow from. But that's when we talk about whole life insurance. And I'll talk about whole life insurance in a minute. But I tell people, rent wealth while you build wealth. So the
mm,
thing is, no one can, let's say, afford, let's say, a $200,000 life insurance policy, because that may be an arm and a leg. But the thing is, I would say get the term insurance while you can actually afford it. And the thing is, you may spend $50 a month for a $500,000 life insurance policy, depending on when you actually get it. But if you really think about it, if you're basically paying $50 every month for the next 30 years, but they're just saying, hey, in the event if I do pass away, you basically been giving this insurance company $50 every month up until the next 30 years. But let's just say all of a sudden, Corona, just what happens is like Corona is out there. You pass away, unless it's not suicide, that life insurance company is obligated to basically pay that death benefit and
mm,
give your loved ones a check for $500,000 or whatever the dollar amount will be when you originally purchased that life insurance tax free. And it's like I tell my clients, this is basically the easiest way to generate wealth and become a millionaire is through life insurance. And this is how you
mm,
see a lot of people basically gain wealth is just through the usage of life insurance.
mm.
So
Makes
now
sense.
that's term life insurance. But whole life insurance is more so the same thing. It's just that it builds up cash value. So every time you basically, let's say, make a payment of, let's say, $100, a portion of that money is going into your cash value. And then over a course of, 3 to 5 years, even longer than that, you can actually borrow from that life insurance policy. The bad thing about that is that, let's say you have a $100,000 life insurance policy and there's $30,000 of cash value in that account. If you take out, let's say, borrow $25,000 of that cash value off your life insurance policy, what's going to happen? If you pass away, the insurance company is basically going to give you the outstanding dollar amount. So you borrowed 25 and you had $100,000. So Montique, I ask you, if
Hmm.
you borrowed 25,000 and your death benefit was 100, you passed away, what would you expect your beneficiaries to receive? 100,000 or 75,000?
100,000.
That's what you would expect. But
Hmm.
because you actually had a loan against that life insurance policy, they're going to give the remaining portion, which is basically going to be 75,000
Oh,
because you
got
didn't
you.
pay for that
Okay.
loan. That
Okay.
loan.
Okay.
So now reverse that. So let's just say that you didn't actually take out a loan on that policy. So you've been paying all this money, $100 for the last, let's say, 20 years or so. And this is whole life
Mhm.
again.
Okay.
So now your cash value is 25,000 inside that $100,000 life insurance policy. You don't take out a loan, you pass away. So remember, you have $25,000 of cash inside that policy. Your
Hmm.
death benefit is worth $100,000.
Hmm.
What would you expect your beneficiary to receive? 100,000 or 125,000?
Wow, that's a good question. 100,000.
100,000. So okay, so what happened to that cash? That $25,000 of cash that's in your account?
You
You
keep it.
expect them to keep that? Who keeps it?
The insurance company.
Absolutely. But the
Wow.
thing is, you've been paying this money for the last 20 years, and that cash value grew inside that policy. So, rightfully so, you paid $25,000 of cash in your account, and
Hmm.
there's $100,000 death benefit.
Wow.
Rightfully so, the client will basically be expecting to receive $125,000 of life insurance. But
Mm.
the thing is, you're paying for two, but you only get one. Is that fair?
No, that's not fair.
No, but that's really just how the life insurance game works.
Wow.
You
Wow.
know, so life insurance, whole life insurance is cool. I would tell people it's different strokes for different folks. So when I sit down with someone, I basically ask them a ton of questions to figure out what would be the best bet for them. So term insurance is not good for everyone. Neither is whole life insurance is good for everyone. It just depends on that particular individual. Does that make
Okay.
sense?
Yeah, yeah, definitely makes sense.
Okay.
Man, this is the thing. Even for me, I'm a finance guy. I know so much about finances and things like that, and this stuff actually, trips me up as well. And the reason why I say that is I know a lot of information about finances and credit and real estate and stock market and all this other good stuff. And if I can't comprehend it or fully understand it, I can see why the average person that's not in finance,
Correct.
the average person that, that just goes about their life. And, I can understand why people are so intimidated by life insurance,
Hmm.
investments, period, but more specifically life insurance because they don't understand it.
Correct.
So how do you overcome the the typical person, even or just people, again, myself included?
Hmm.
How do we get our culture to start to get these life insurance policies so that because it only benefits you. Either one that you get, it benefits you. And guess what, everybody? We're all going to die one day. A lot
Yes.
of people around me hate when I say that all the time, but
Hmm.
everybody's going to die. It's guaranteed that you're going to die.
Of
So
course.
instead of looking at it like, a bad thing, you should look at it like not necessarily like as a good thing, but benefit from it so that your family will benefit even if you're not here anymore. So how do we get people the culture to start getting into getting these policies and things like that?
You know what I would say, and that's a great question, and that's still an answer I haven't really figured out as of yet. But the thing is more so, hey, these Zoom calls, these webinars that we're doing, but it's more so, hey, that particular individual actually has to want that information, and to realize that, like a lot of people say, well, you know what, I have it through my job, like
Mm,
life insurance in my job, but what they don't realize that, all right, if you leave your job, if your job divorced you, you no longer have that life insurance anymore. At the second time, you just said it earlier, you're guaranteed to die. So the thing is, I tell people, I'm like, hey, listen, you need to get life insurance. They're like, well, I'm not gonna die, but you definitely you're guaranteed to die. So I
hmm
tell people, hey, when are you gonna? I say, when is your birthday? They say, hey, my birthday is June 25th, and then I just ask them, when is your death date? I
mm,
just be quiet, and
mm,
they no one knows. So the
mm.
thing is, what's guaranteed is that you will die. But the thing is, everyone just needs to get some type of life insurance, whether it's term, whole life, universal, variable. The thing is, you need life insurance, and that's really just how you create generational wealth. This is the easiest way to basically create generational wealth is more so with a life insurance policy.
Yeah, and I think having these discussions, having these shows, um, are going to help a lot. Educate people and get people comfortable with understanding.
Hmm.
Because again, it's so inexpensive. Like insurance policies, and I know because I have insurance policies and things like that. And it's so inexpensive. I mean, I'm talking like under $100 a month. In some cases, depending on your age, it's so inexpensive,
Correct.
and people spend so much money on things that
Nonsense.
depreciate or that doesn't mean anything, but something that will, help your family out in the long run. It just doesn't make sense. But again, it's education. It's
Correct.
education and getting this information out there, man. So,
Hmm.
but definitely, man, like I wish it was an answer for that.
You're right. You're right.
Yeah.
Absolutely. But no, like again, it's like I can't basically say it loud enough. It's like, everyone needs life insurance. It doesn't matter who you are, what's guaranteed that you will die. But the thing is, you want to get this life insurance as possible. I mean, as soon as possible, because the thing is, the younger you are, the cheaper the life insurance would be.
Wow. Okay. Okay. Well, yeah, man. Thanks for that information, man. Thanks a
No
lot for
problem,
that
man.
information, man. I'm quite sure people out there appreciate this information. The next thing that I want to get into is actually a piggyback. I'm gonna go off, you know, you know, off track a little bit
It's fine.
because I want to go right back into this. So the next question that I have for you is, why is it important to get life insurance early as possible?
Okay. Same situation. So the thing is, how life insurance works is the younger you are, the cheaper it's going to be. And a lot of times, really think about this. Let's say when you're in your 20s, I'll use me as an example. When you're in your 20s, this is basically the healthiest time of your life. no high blood pressure, no cholesterol, no issues like that. But really think about, let's say, when you're in your 50s, your 60s, or 70s, what generally happens, like your health declines.
Mm-hmm.
So now, from the insurance point of view, the insurance company is looking at you as a risk, because now they're saying, all right, well, this 60 or 70-year-old wants life insurance. But now high blood pressure kicked in, diabetes, high blood pressure, things of that nature. So they're looking at you as a risk. So they're saying, all right, well, if you want this life insurance, you got to basically pay an arm and a leg for this, because what's going to happen is that you're more likely to die before someone 20 years old. So the thing is, you want to get it before you actually, hit a certain age. And really the threshold is, you want to get this as soon as you actually start having kids and someone depends on your income. That's when it's not about you anymore. And that's when you want to actually have some type of life insurance policy. And you want to at least get 7 to 10 times your annual salary. Because a lot of people be having, I kid you not, it's like I see people who basically got like a $20,000 life insurance policy, and they saying, well, I actually already have it and I'm set. But if you really think about it, let's just say someone had a $20,000 life insurance policy and they had a $50,000 mortgage. They're upside down.
Mm.
Because as soon as basically that person passed away, that 20,000, it may cost you 10 or 15 to basically bury you, and now $5,000 is left over for your beneficiary to basically live for the rest of their lives, or from a certain time period. What about the
Wow.
mortgage? You
Wow.
know,
Wow. So can you give the people a, and I know this is a general question.
Mhm.
Um, how much is life insurance for, let's say, a, a 21 to 30-year-old in good health?
In good health. So probably for, let's say, a $300,000 policy for a 20-year-old, let's say, it may be $25 a
And
month.
that is that term or whole?
That's term. And so with whole life, it may be $50,
Wow.
50 to 60, 70, somewhere around there. And the reason why it's
$25.
more, because that whole life insurance is basically for your whole life. But I tell people, the thing is, I'll use myself again as an example. I have two young children, 4 and 2. 30 years from now, will they still need my income? Probably not, because they're going to be 34 years old and 36 years old. They should be on their own at that particular time. So
Mm-hmm.
right now, they need my income. So that's why, hey, I'm a fan of term insurance, because I'm going to get the biggest bang for my buck.
Mm-hmm.
So I may get a $500,000 policy for $100,
Right.
for the next 20 years or so.
Mm. Wow.
So I'm going to rent wealth while I'm building wealth with other assets.
Wow. Wow. That's definitely important. And I hope, again, I hope this information is definitely helping people. I pray that it is, because like I said, our culture definitely needs this information. A lot of times, financial literacy, financial education, kind of gets pushed to the side. A lot of people think, I don't really need this information, until they actually really need this information. Till it's time to go buy a house, or
Correct.
to get a car, or unfortunately a funeral.
Hmm.
Because a lot of times in our culture, unfortunately, neither one of us grew up with money, with wealth, and we come from low income neighborhoods, and the mentality sometimes is that you don't need insurance, but often, too many times, we see one of our loved ones pass away, and instead of getting insurance, we're passing the plate around to try to bury the person.
Correct.
And I've been in that situations. I've paid for funerals. I've helped pay for funerals before, for family members and friends and things like that. And it can be a very awkward thing.
Hmm.
But a lot of this stuff is so avoidable. And it's sometimes it just hurts to even to see. But and that's what, again, um that's the reason why we started the show, is to get this information out, so that we can educate people, and hopefully hopefully have the discussion start to be normalized.
Correct.
And finances, money, credit, it becomes cool. It becomes the thing to do. Like, if you're not doing this, just like how people go get Gucci belts and clothes and cars and all this stuff, the status should be, you got life insurance, you got
Showing your
assets,
policy. Exactly.
how many streams of income you have.
Mm.
That's the mentality that we should have. So unfortunately, it's not like that. But again, that's why we started the show to try to, to try to put that information out there more so that people can grasp it and understand it, and so that they become a part of this investment world.
Correct. Correct.
So
Hmm.
man, that's unfortunate. That's unfortunate, man. The next thing we're gonna go over is I'm gonna talk a little bit about the difference between a FICO score and a Vantage score. What a FICO score is, the FICO score is used by about 95% of lenders, close to, it's like 92%, but 92 to 95% of lenders use what's called a FICO score.
Hmm.
FICO score was started by a company called Fair Isaac Corporation. And what they do is they pretty much sell all of our information, the public's information. They get all of that information to the credit bureaus, and credit bureaus in turn give you a risk factor, and then FICO gives you a score. Now, a FICO score, there's no certain calculation. You can't find this stuff on the internet. Like you can't find how they use their calculations. They use what's called an algorithm.
Hmm.
So none of us really know, but what you can do is you can see trends. Like for someone like myself that works in the credit field, you can see trends from working with many clients of what should happen on
Yeah.
a credit report, but nobody knows exactly what will happen because their algorithms change all of the time. So the FICO score is used again by lenders. Lenders pay FICO to give them these credit scores. All right. So when you go to get a mortgage, a car loan, any type of personal loan and things like that, you get calculated, a score calculates. And the score goes from 350 to 850. And what it does is the lower your score, the less likely you'll get a loan, whatever the loan may be.
Hmm.
The higher your score, then the more likely you will get that loan. And again, this all depends on the things that's on your credit report. All right. The other scores are called Vantage scores.
Okay.
And what a Vantage score is, it's a scoring model that was created by TransUnion, Experian, and Equifax as competition to the FICO score for lenders to be able to utilize so that they can make all of these billions of dollars that FICO is making.
Hmm.
All right. So when you go on Credit Karma, most people know about Credit Karma. Credit Karma is a platform where you can get a free credit report and a free credit score from TransUnion and Equifax. All right. Those scores that you see on Credit Karma are not FICO scores. They're called Vantage
Mm.
scores. All
Okay.
right. So again, they are the competition of FICO. So when you do look at your credit report from other little sites like freecreditscore.com and all those spin-off companies,
Hmm.
you're looking at a Vantage score.
Mm.
The only place that you can get an official FICO score from is from FICO.com itself. It's called myfico.com, or directly purchasing your credit report from the credit bureaus,
Mm.
Experian,
Okay.
TransUnion, and Equifax. Those are the only place that you can get an official FICO score. All right.
Mm.
Again, Credit Karma and all of those spin-off companies that you see on the internet, where you can get your credit report and credit scores, those are not FICO scores,
Okay.
So just a lot of people don't understand that. And the reason why it's important is because, let's say, Terrence, you go into a car dealership and you're so used to looking at your Vantage score on Credit
Mhm.
Karma.
Yeah.
You've been looking at it for forever. You check yours, and I know you probably check it every day. So
Do.
you seeing your credit score on there, and let's say you got a 700 on your Vantage score at on Credit Karma for Equifax, and you got a 705 for your TransUnion Vantage score on Credit Karma.
Hmm.
Now you go to a car dealership, and you go to that car dealership, you feeling good because your credit score, or so you think, is a
Yeah.
700 and a 705.
Hmm.
You go to that car dealership now, pick out the car that you want. They treat you nice. Again, I worked in the car dealership, so I know the whole game. All right. So we make you feel real good, and you're
Mhm.
going to be prepared to stay for a while. Right.
Mhm. Okay.
So now you get that, you find the car that you want, you test drove it, you find the car that you want. Now it's time to go over the numbers. You go over the numbers, then the finance manager or the sales manager runs your credit. They come back and say, hey, Terrence, we got some great news. Your credit scores are, let's say, a 625 and a 630.
Mhm.
And you're scratching your head like, and this happened all the time when I worked at a dealership.
Yeah.
No, my credit score is, and they pull up, they get their cell phone, their iPhone and or Android. They scroll through, say, no, this is my credit score right here. What are you talking about? And that's when the first time most people get educated on
Mhm.
what's a Vantage score and what's a FICO score,
Okay.
because dealerships use FICO scores.
Mhm.
All right. So they'll explain that to you, that the credit, what you're looking at on Credit Karma is not, we don't even recognize that. That's not what we use. We use what's called a FICO score.
Mhm.
So that's usually most people's first introduction to the difference between the FICO score and the Vantage score.
Okay.
All right.
Wow.
So so that's the difference between the two.
Okay.
So when you're looking at Credit Karma, just be aware, everyone, that those are not your actual official scores that will be used in a lending decision by a bank or a finance company or any type of lender. So just be aware of that.
Okay. Now I got a few questions. So that kind of remind me and basically clarify if this is actually incorrect. So the lower the number, whether it's Vantage or FICO, they're looking at them as a risk. Is that correct?
Well, they both actually go on a Vantage score, just like a FICO score. Like I told you guys, it's 350 to 850
Hmm.
is a FICO score. A Vantage score is the exact same thing. It's from
Okay.
350 to 850. Now the models it used to go up to 900. Like, so that really confused people. Like the Vantage scores used to go up to a 900 when a FICO score was 850.
Hmm.
And now trans the scores, the Vantage scores have a new model. It's called the 3.0 model. So if you ever look at Credit Karma, pay attention and you'll see Vantage score 3.0, because this is the third edition of it. So those scores model now a 350 to 850 that FICO is using, right?
Okay.
So that really confuses people. But again, they use a completely different algorithm, so it's never going to be the same.
Mm.
It's never going to be the same because they're using a completely different model for how they arrive at their scores for people, and FICO has their own, model of how they arrive at their scores.
Okay.
So
All
it's
right.
going it's always going to be a difference.
Okay. So is it safe to say if someone basically Vantage or FICO, they got a 355, is
Oh,
that from the eyes of, let's say, a sales manager,
yeah.
is that basically somebody with high risk? I'm saying, hey, you know what? Is it going to be declined or we going to charge you a higher interest
Oh,
rate?
first of all, 355. You can't finance a candy bar with a
Oh, wow.
355.
Okay.
A bad credit score to get approved for a car. And again, this is going off subject, but a bad credit score where you can barely get a car. And again, it depends on your down payment, and it depends on the things that's on your credit report. Like if you got repos and stuff like that on there, it's going to be, not good for you.
Okay.
But you let's just say around a 500, you can still get a car, depending on the down payment
Hmm.
stuff. But if your credit score is in the fours, don't even waste your
Get about
time at a car dealership, because all you're going to be doing is wasting time. And
Okay.
again, unless you got a big down payment.
Okay.
When I mean a big down payment, the car is 13,000. Unless you got $10,000 down,
Mm.
going then you can do something if you got a 400. But 300s, you don't see too many 300 anything in credit scores. I've probably seen in my whole 15 years of you know dealing in credit management, maybe three times that I've seen a three, like somebody with like a 380 or something like that. Like
Okay.
that's very. I mean, you got to be doing some. You got to have some horrible, man. It got to be horrible to be in the threes. But
Okay.
commonly people come in the fours, and as soon as we run that credit and we see that as a sales manager, it's kind of like, get this person out the door, because it's a waste.
Next.
It's a waste of time.
Next.
That's how the industry is.
Okay.
Again, I hated the car industry, but that's the mentality.
Okay.
They'll be very nice to you, and you'll notice a difference when that credit score comes back. When that sales manager and that salesperson, when they attitude switches,
Hmm.
yeah, they ran your credit in, and it's not good, and they're trying to get you out of there.
Okay.
You know, so
All right. I got one other question. So
absolutely.
from your experience, has there ever been a time where the Vantage score was basically the same or fairly similar to the FICO?
Sometimes,
Okay.
and
Okay.
it works. It works different ways too. Like sometimes you'll have, let's say in your case that we use as an example, you'll have a 750. I mean, 705 and a 700 on both those two credit
Hmm.
things on Credit Karma, and then you go into the dealership and your scores, it might be, they tell you your score is a 730 and a 735.
Okay.
So it works both ways. It's not always a bad thing.
Hmm.
It's not like they're always, it's off. It's always going to be off, but it might be off in a good way or it might be off in a bad way.
Okay.
So it can go either direction.
All right. Cool.
All
So
right.
more so, don't really, just I guess for the listeners, more so don't really go by Credit Karma because it's like until maybe some years ago, like that's all I really knew was basically about like Credit Karma, just looking on the app and seeing what's what.
Well, I don't want to say this because they're not paying us.
Okay.
So you might, you can go to, I'll give out free information. You can go to myfico.com.
Okay.
Now keep in mind, your credit score is like $43.
Mm,
But what it'll do is you'll sign up for because they don't just give you the score,
okay.
they sign you up for a monitoring service. And the monitoring service, it basically will alert you on your Experian, TransUnion, and Equifax credit score daily activity, that any
Mhm.
changes that happen to your credit profile, it'll send you an email alert, and then you'll have access to your credit scores.
Okay.
So it's around $43 depending on what state. In New York State,
Hmm.
it's around $43 and some change.
Hmm.
So I mean, to me, it's a good investment.
Okay.
But I recognize the value in it. So if you want to get your official FICO scores, like I said, you can either go to myfico.com and sign up for the monitoring service, or you can go to, it's going to be more expensive if you go individually to each credit bureau, because that's the only other place that you can get it. It's
Okay.
from directly at TransUnion, Experian, or Equifax.
Hmm.
And if you do that, it's going to be a lot more expensive. And that's why I recommend myfico.com. Even if you
Okay.
want to get it and cancel the subscription, just so you have it.
Hmm.
But it is good to have a credit monitoring service. It's
Okay.
definitely good to have a credit monitoring service so that you can know what goes on, with your credit.
All right. I got two short questions.
Yeah, sure, sure.
One question um, is it worth the? I'm trying to phrase it the right way. More so, is it worth the investment, and should everyone know like what their credit score is? Yeah, I guess that's basically the best way to put it. So, like, should everyone know exactly at any given time like what their credit score is?
Again, everybody should definitely know what their credit score is, and everyone should also know the information that's on your credit report.
Okay.
Because a lot of times you'll hear people say, "Well, my credit is bad. I don't really care about my credit or
Hmm.
whatever. I don't care. I don't need to see it because I know it's bad, and I got all the stuff on there." But identity theft is the biggest crime in America.
Okay.
So people can take your identity, even if you have bad credit.
Hmm.
They can build a credit profile. And if you never pay attention to your credit,
Hmm.
someone could build a credit profile in your name. And I've seen it happen before. Again, Dylan in his credit repair business for the last 15 years. You will be amazed at the things that people could do. People actually criminals prey on you not knowing your credit score or not checking your credit score all of the time and things like that. Because all someone has to do is, let's say you don't pay attention to your credit, you don't care about it, fine, whatever, you don't care. Okay. Now, someone comes along and steals your identity, builds a credit profile, changes the addresses on your credit. You'll never
Mm,
know.
okay.
You have no idea. That's what they do. They'll change the address on there. They'll build a credit profile, and then they'll do things like get loans and things like that in
Open
your
it up.
name, open bank accounts in your name.
Wow.
So now, once you become financially responsible at whatever time that is in your life, and now all of a sudden you care about credit, now you go to look at your credit finally after 10 years or 20 years or whatever, and now you discover all of the damage.
Mm, okay.
Now you discover all of the warrants that you could potentially have because they had opened up bank accounts in your name and ran it up and did some bank fraud or something like that. So you can get warrants behind that, and trying to clear that up is like good luck doing that.
Okay.
You ever seen a movie with Ti and the lady? It was about identity theft, and she was you check
I
that
think
movie.
so. Yeah.
Yeah, check that movie out. But that's kind of what it was talking about.
Hmm.
But yeah, people identity thieves prey on people not knowing
Okay.
about their credit. So yes, I definitely would encourage everyone to get a credit monitoring service so
Okay.
that you can get alerts and things like that. Yes, it's an investment, it's just like life insurance.
Yeah.
It'll cost
Of
you a couple
course.
of dollars a month,
Hmm.
but it's so much value in it.
Correct.
And if you need help trying to figure out, with a monitoring service, or you have questions and things like that, like I said, definitely feel free to send me a message. Like I said, Montique Shelton on Facebook and at Montique Shelton on Instagram. And hit me up, and I can definitely help you out. Or if you need any more information, because we're going to wrap up the show now, and we want to just let everyone know, real quick, to if you want to ask questions or you want us to answer questions when we do the show, um, again, you could send us your question. You could message us your question and say, "Hey, I want this question answered," so that everybody can know, the
Correct.
answer to it. Because a lot of times, if I'm just answering questions like I've been doing for the last couple of years, it really is just like on a one-on-one basis. But I'd rather everybody, the culture, get all this information. So because that one person question might have been 1,000 other people's question,
Hmm.
and we can answer the questions like that. So if you guys have any questions, just hit me or Terrence up on Facebook or on Instagram. We got our website coming for the show soon. We'll be announcing that real soon. Some other things, some other giveaways, a lot of stuff that we're gonna be doing. We're gonna be announcing that very soon. So Terrence, let them know where they can get in contact with you.
Yes. Yes. So, just as you see on the screen, is more so my initials and my children's initials. It's basically TL Dubois. That's more so TL Dubois on all social media platforms. So right now I'm only on Facebook and Instagram. So I push out a lot of content on Instagram. So if you definitely want to, basically keep in contact and just basically see what's going on with me, definitely check out TL Dubois on Instagram. And next time we actually do our live show, I actually have a different social sites as well because I got a few merchandise coming out as well for a couple of things that I'm working on.
Okay, and if someone wants to get like a sit down, like like a Zoom call, free Zoom call to go over their financial situation, as far as investments or life insurance go, they can reach you on that same at that same those same
Yep.
places.
Facebook or Instagram, absolutely. So yeah, more so just direct message me, tell me. Basically, you can even just reference the show, and everything that I do is basically free of charge. So even if it's basically for investments or life insurance, um, I'm more so. It's like once again, it's like I've been doing this for the last 20 years. So when it comes to basically this is more so. I'm the subject matter expert when it comes to financial services with life insurance and investments. But everything is free of charge. So my thing is, each one teach one. Just get the information, and the thing is like I'm guaranteeing that you're basically going to learn something new and
Hmm.
something that you basically can take on and basically share with other people once you actually learn it. Because that's really my main focus. Is just, hey, once I teach you something, you master it, you basically play it forward and move it along and basically give it to someone else.
Absolutely, and I'm the exact same way. If you guys have any credit related questions or car buying, um, business, startup, or if you're already an existing business, business management, advice or questions, personal financial coaching, anything like that, just again, feel free to hit me up. Like I said, on Facebook, Montique Shelton, Montique Shelton on Facebook, and at Montique Shelton on Instagram. And that's pretty much it for this episode. Again, we want to thank our sponsor, Respect My Blessing clothing line, Marcellus. We appreciate it. And until next time, money, power, invest. And we want to educate, motivate, and inspire.
Here you go.
Peace.
Peace.